Welcome back, traders. Okay, so after yesterday's big index explosion, the one that had us buzzing about sustained momentum.
Yeah, felt like things were really taking off.
Right. Well, today served up a sneakier vibe. We had SPY and QQQ quietly extending, but then IWM hit the brakes right at resistance.
Mm-hmm. And real estate. Oof.
Yeah, real estate cratered on volume. Plus, you've got consumer confidence tanking to a 7-month low, worries about the shutdown.
And the Fed prepping its rate call for tomorrow.
Exactly. So buckle up. Could be some sparks with earnings hitting, too. You're tuned into the Stock Market Summary series, and as you guys know, none of this is buying or selling advice.
Nope, we're just here for market commentary, education, nothing financial advice here.
Okay, let's get into it.
So today, let's try to cut through that noise a bit. We need to analyze how the technicals are really driving things, especially, the divergence we're seeing as we head into that big Fed decision tomorrow.
Right. And we did see that streak continue like we talked about last week. SPY edged up, 0.27%. QQQ added a solid 0.77%. So the high flyers are still flying.
Exactly, they are. But you just can't ignore that yellow flag flashing in the small caps. IWM dipped over 0.5%.
Installed where exactly?
Right at that prior swing high's horizontal resistance trend line. It's a really key supply zone. And seeing it get rejected there, it strongly suggests, small caps probably need to consolidate more, maybe pull back deeper before they can really try for a breakout again.
That divergence, wow, it was echoed so brutally in the sectors today. Tech, XLK, led by almost 1%.
Yep, strong showing.
But then look at real estate, XLRE, down over 2%. And the volume. Massive, just shocking volume.
Yeah.
But why is that volume spike so important right now? I mean, isn't real estate always kind of jumpy about rate fears?
It is sensitive, absolutely. But the volume, that tells the real story here. That kind of action, it's like a clearance sale. It implies big money, institutional money, is aggressively getting out before the potential hike tomorrow.
Ah, okay.
So if the Fed maybe disappoints the hawks tomorrow, this huge exit could actually set XLRE up for a pretty powerful, oversold bounce, because all the weak hands, they've already been shaken out.
Huh. That really adds context to the technicals.
Yeah.
And beyond the indexes, we're seeing that same kind of technical tension in specific stocks too, right? Like XPeng, XPEV.
Oh yeah, look at XPEV. It's squeezing inside this really nice weekly ascending triangle.
Okay, explain that pattern, like a coiled spring.
Exactly. Think of it like a pressure cooker. It's just pent up with energy, volatilities and consolidating, tightening up. So when it finally resolves, upside or downside, it's likely going to be a violent move.
Yeah.
Definitely one we're keeping on the radar for the next couple of months.
Okay. And meanwhile, there's Tesla, TSLA, really testing everyone's patience, isn't it?
Tell me about it.
It's grinding higher slowly in what looks like, it's choppy, but it's a textbook bull flag formation, right?
Right.
Which is basically like a pit stop where traders catch their breath before the next move up. How critical is it for a stock like Tesla to hold that kind of structure before big news like the Fed?
Oh, it's everything. Holding that flag, even if it's choppy, shows that demand is slowly, steadily absorbing supply. It keeps the path open for that potential next push higher.
Right.
Days like today really drive it home. You see XPE's triangle tension, TSLA trying to hold its flag, IWM stalling at resistance, XLRE dumping on volume. It just hammers home how absolutely essential pattern recognition is.
And timing.
And precise entry-exit timing, yeah. And having absolutely bulletproof risk rules. That kind of foundational technical discipline, that's exactly what we drill down on in our mentorship program.
Makes sense. And as always, guys, if you've got a stock you're watching or maybe a question about the markets, just drop it in the comments. We might cover it in an upcoming episode.
Yeah, let us know.
And by the way, if you're enjoying this video, finding these summaries helpful, do us a big favor and hit that like button. It's totally free, helps us out a ton. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later if you want.
Okay, switching gears slightly to the macro picture. Honestly, it was a pretty news-like day. Everything's just overshadowed by tomorrow's Fed meeting.
Yeah, the calm before the storm.
Pretty much.
Yeah.
The news we did get, like that consumer confidence number hitting a 7-month low with the shutdown jitters, it just adds more pressure on the Fed, right? It gives them maybe less clear signals on, say, employment or inflation.
Right. We also saw some interesting moves, maybe volatility in crypto and metals. Bitcoin slipped, 1.21%?
Yep, and right off that key 50-day moving average.
Which, for anyone unfamiliar, that 50-day is kind of like the market's longer-term trend health barometer. So seeing it fail that test.
Well, it's a clear warning sign. Buyers need to step up soon. Definitely a level to watch. Now, metals had a fascinating split personality today. Gold, GLD, closed down 0.72%. But it left these fat downside wicks on the chart.
Meaning buyers stepped in intraday.
Exactly. Intraday plunges got bought right back up. But silver, SLV, totally bucked the trend. It was up 0.71%, sharp rebound.
So what's that suggest?
Well, it kind of suggests investors might be loading the dips in precious metals, looking for conviction to maybe restart that upward grind we saw earlier.
Okay, so putting it all together then. Today's selective strength, mostly in tech while things were softer elsewhere, and IWM stalling. It actually feels like a pretty healthy breather, doesn't it? Especially after chasing those all-time highs.
I think so. It builds just enough caution back into the tape right before the Fed makes its big swing tomorrow.
Yeah.
And there's going to be volatility then.
Guaranteed.
That selective strength, though, that's the key signal today. It really raises an important question for you watching. What's your read on that huge XLRE volume spike? Is it maybe a bear trap setting up? Or is this the start of a much deeper pullback for the sector?
Good question.
And thinking about XPEV, what target are you watching for that triangle buildup as we head deeper into earnings?
Lots to think about. Okay, we'll catch you in tomorrow's market summary for the Fed reaction.